In the year 1862, a man named John Jacob Astor passed away, leaving an estate valued at $20 million. An immense fortune for the time, and even more astonishing considering its origin. Astor was not born into wealth, nor did he strike it rich in a gold rush. Astor's wealth was built, quite literally, from the ground up. He was the United States' first multimillionaire, and he made his fortune through savvy real estate investments in New York City. Astor bought large tracts of Manhattan farmland, anticipating the city's rapid expansion. As the city grew, so did the value of his land. His keen foresight and strategic investments allowed him to amass a fortune that would be worth several $1 billion today. Astor's story is a testament to the power of real estate investment, a concept that has stood the test of time. Real estate investment isn't a new phenomenon. It has been a cornerstone of wealth creation for centuries. Trace the roots of civilization back to ancient times, and you'll find land and property at the heart of power and prosperity. The pharaohs of Egypt, for example, understood the value of fertile land along the Nile, using it to bolster their wealth and influence. Move forward to the feudal systems of the Middle Ages, and again, it's clear that owning land was synonymous with wealth and status. The lords and nobles of these times held vast tracts of land, leasing them out to tenants in return for goods and services. Fast forward to the Industrial Revolution, and we see the dawn of modern real estate investment. The boom in industry and the growth of cities led to a surge in demand for commercial and residential properties. Savvy investors seized the opportunity, buying properties to rent or sell at a profit, a strategy still used today. In the modern era, real estate investment has become more complex and sophisticated, but the fundamental principle remains the same. Owning property is a tangible, durable asset that can provide a steady income stream and appreciate in value over time. This enduring appeal of real estate investment is not just about potential financial returns, it's also about stability and resilience. In times of economic turbulence, real estate has often proven to be a safe haven, a tangible asset that can weather the storm of market volatility. Consider the Great Depression of the 1930s, or the financial crisis of 2008. In both instances, while the stock market plunged, many real estate markets remained relatively stable or recovered more quickly. And it's not just the big crashes. Throughout history, real estate has shown a remarkable ability to hold its value during periods of inflation, providing a hedge against the erosion of purchasing power. From the pharaohs of Egypt to modern-day moguls, real estate has always been a key player in wealth accumulation. Its historical significance as an investment is both profound and enduring, a testament to its resilience and potential for wealth creation. Markets fluctuate, economies rise and fall, but real estate has shown a remarkable resilience. Let's delve into the economic factors that contribute to this stability. First up, inflation. While it's often seen as a villain in the world of finance, it can actually be an ally for real estate investors. As prices rise, so too does the value of properties, and with it, rental income. This natural hedge against inflation is one reason why real estate can be such a safe bet. Next, let's talk interest rates. Lower rates generally mean more affordable borrowing, which stimulates demand for real estate. On the flip side, higher rates can dampen that demand. But it's key to remember that real estate isn't just about buying and selling. It's also about holding and generating income through rents, which can remain steady even when rates fluctuate. Now, onto market cycles. Like any investment, real estate has its ups and downs. But here's the thing. Even when the market is down, properties still provide value. They offer shelter, a basic human need, and as long as people need places to live and work, there will always be demand for real estate. Historically, we've seen these factors play out time and again. In the inflationary 70s, real estate held its own. During the high-interest early 80s, rental properties remained in demand, and even in the face of real estate market crashes, like the one in the early 90s, or the more recent one in 2008, the market eventually recovered and long-term investors were rewarded. So what's the takeaway here? While economic factors like inflation, interest rates, and market cycles do impact real estate, they don't define it. The inherent value of property, its utility, and its scarcity make it a resilient asset. Despite the ebbs and flows of the economy, real estate has proven to be a stable and reliable investment. Scene script. Geography plays a huge role in the resilience of real estate investments. Let's step into the world of geographic resilience. It's a fascinating concept, really. You see, geography isn't just about physical landscapes. It also encompasses the socio-economic and political climate of a region. These factors can have a profound impact on the value and stability of real estate investments. Take, for instance, a region that's rich in natural resources. Properties in such areas often maintain their value, even during economic downturns, due to the steady demand for these resources. Think of towns built around gold mines during the gold rush, or cities sprouting near oil fields in recent times. The natural wealth of these regions provided a safety net for real estate investments. Now consider areas with a strong tourism industry. These places, blessed with natural beauty or historical significance, attract a constant flow of visitors. This tourism-driven demand can bolster the real estate market, creating a buffer against economic turbulence. The allure of sun-kissed beaches or snow-capped mountains is enduring, making properties in such locations resilient investments. Let's not forget about regions with robust industries or leading educational institutions. These places draw in a consistent population influx, be it professionals seeking job opportunities or students pursuing education. The demand for housing in these regions tends to remain high, contributing to the stability of the real estate market. But it's not just about what's in the region, it's also about the region's connection to the rest of the world. Properties in well-connected areas, with good infrastructure and proximity to major cities, often fare better. Easy access to amenities and opportunities adds to the attractiveness of these locations, enhancing their real estate resilience. So, when you think about investing in real estate, remember to consider the geographic resilience of the region. The physical attributes, socio-economic factors, and connectivity of an area can significantly influence the stability of your investment. The success of real estate often lies in the old adage, location, location, location. Let's delve into some real-world examples of resilient real estate markets. Our first stop takes us to New York City in the midst of the Great Recession. While many sectors struggled, the city's real estate market displayed extraordinary resilience. Investors who held onto their properties during this turbulent time saw their patience rewarded with a robust recovery. This resilience was not a fluke, but a testament to the enduring appeal of the city's real estate, bolstered by the strong demand for housing and office spaces. Moving across the pond to London, we find another tale of resilience. Despite the uncertainties of Brexit, London's real estate market has remained a powerhouse. Investors, both domestic and international, continue to see the city as a safe haven for their capital. The stability of London's real estate market, even amidst political upheaval, is a testament to the long-term value of investing in prime locations. Next, let's turn our attention to the emerging markets. Take Nairobi, Kenya, for instance. Despite facing numerous challenges, the city's real estate market has shown remarkable resilience. The growth of Nairobi's middle class has spurred a demand for housing, while the city's status as a regional economic hub has attracted commercial real estate investments. Investors who recognize these trends have reaped significant returns. Now let's talk about the people behind these investments. Successful investors like Warren Buffett and Ray Dalio have long recognized the value of real estate as a part of their diversified portfolios. They understand that real estate investments can provide a steady income stream, a hedge against inflation, and a buffer during stock market downturns. In each of these cases, the investors understood the fundamental strengths of their chosen markets. They recognized the enduring demand for real estate, whether it was for a Manhattan apartment, a London office building, or a Nairobi shopping center. They also understood the importance of patience and long-term thinking in real estate investment. These success stories underscore the resilience and potential of real estate investment. The history of real estate is a chronicle of resilience. This statement encapsulates our journey through the annals of real estate investment. We've explored how real estate has weathered economic storms, withstood market cycles, and thrived in various geographic regions. From the historical significance of real estate as a sturdy investment vehicle to the economic factors affecting its stability, we've delved into the depths of this fascinating subject. We've traveled through time, highlighting the geographic resilience of this sector, even during periods of adversity. Our journey also took us through case studies of resilient real estate markets and successful investors. In each instance, we've seen how time and patience have played significant roles in successful real estate investments. As history has shown us, when it comes to real estate investment, patience is not just a virtue, it's a strategy. So, as we conclude, let's remember that the historical resilience of real estate forms the bedrock of its future potential.